Hey, listen to this. Jake Claver just came out with another one of his big predictions about XRP, and man, it's wild this time. He's saying that by early 2026, the price of XRP could go anywhere from just $1 all the way up to $2,000. Yeah, you heard that right. 2,000 bucks for one single XRP coin. It's kind of funny when you think about it because not too long ago he was talking about XRP hitting $750 by the end of this year. Then things got a little quieter and people started hearing maybe $10 or $14 instead. But now he's back swinging really big again with these huge numbers like $1,500 or even $2,000. It feels like the targets keep moving around a lot. So what exactly is he saying? Well, he explained it like this. If all these different events and catalysts that he's expecting actually happen in the exact time frame he thinks they will, then XRP could really shoot up to $1,500 or $2,000. He knows it sounds completely crazy, and he even said that himself. I know that sounds crazy, and that's fair. Let me break down everything he's counting on so you can see the full picture. First thing he mentioned is something called the unwinding of the reverse carry trade. Basically, he believes there's going to be a huge shift in how big money moves around the world. Right now, a lot of money is sitting in traditional markets through these carry trades, but he thinks that in the coming months there could be a major liquidity change. All that money might start flowing out of the old markets and into digital assets like XRP instead. He says this kind of big move usually happens during times of really intense macro volatility. That means when the economy gets super shaky, or when there are big changes in monetary policy, especially stuff like US interest rate decisions. Jake puts the probability of this whole carry trade unwind happening at about 20 to 30%. So he's not saying it's super likely, but he thinks it's possible enough to talk about. Next up, he's watching Tether really closely. He thinks the US agencies might launch some coordinated action against Tether, maybe even using something called the Genius Act. If that happens, it could create a lot of panic in the entire stablecoin world. People might lose confidence in Tether and other stablecoins like USDT. And because Tether is one of the things that helps keep Bitcoin's price up, if Tether gets in trouble, Bitcoin could take a big hit too. In that kind of situation, Jake believes investors might rush out of Bitcoin and look for somewhere else to put their money. And he thinks a lot of them could choose XRP as a safe haven. On the regulatory front, we already got some positive movement. The SEC dropped their cross appeal in the case against Ripple. That's a big deal because it means the long legal fight is basically over on that side. Now, the main thing everyone is waiting for is the approval of spot XRP ETFs. There's going to be an update from the SEC around mid to late October, specifically on the 18th, 19th, or 20th. That update should give more information about the specific spot XRP exchange-traded funds that companies want to launch. Another big idea Jake is pushing is that XRP could become the world's bridge currency. Not the main reserve currency exactly, but the currency that helps move money quickly between different countries and different payment systems. He sees XRP being used for cross-border payments and for huge institutional settlements at a scale we've never seen before. That would mean banks and even governments starting to adopt it in a really serious way. But he's honest about it. He says the probability of this happening is very low, less than 5%. Then there's the supply shock part, and this one actually feels more believable to a lot of people. Jake says that when institutions and big companies really start using XRP for real payments and financial protocols, the demand could become way bigger than the supply that's actually available. Right now, only about 8 to 9% of all XRP is sitting on exchanges. Most of the coins have been taken off the exchanges over the last few months, and it's been happening at a pretty fast pace. So if suddenly a bunch of companies or governments need XRP for their treasuries or daily operations, there might not be enough available, and that could push the price up really hard. On top of that, once the spot ETFs get approved, those funds will need to buy actual XRP on the open market to back their shares. That buying pressure could be enormous. The CEO of Canary Capital even said that in the first few weeks after launch, the ETFs could see up to $5 billion flowing in. And because of the way crypto market multipliers work, that kind of fresh money could have a massive effect. For example, if you take $5 billion and apply a 500 times multiplier, which has happened in other crypto situations, you're suddenly looking at a $2.5 trillion market cap for XRP. That would already push the price into the multiple digits. But to actually reach $1,000 or $2,000 per XRP, the total market cap would need to get all the way up to something like $50 trillion or even $100 trillion. Jake also brings in the idea of bigger macro events and geopolitical crises. Things like conflicts in the Middle East, a global recession, or other kinds of instability could make traditional markets feel risky. In those moments, big institutions might look for alternative places to store value. XRP's super fast settlement speed and the strong, reliable network behind it could make it look attractive during those crisis times, pulling in a lot of capital. Now, I have to be straight with you. I really, really want all of this to happen. If XRP actually went to $1,000 or $2,000, it would change everything for so many people. You could basically retire, buy a nice house, travel wherever you want, or just chill and play video games all day if that's what you feel like doing. But at the same time, I get a little nervous when predictions jump this high in such a short time, only a few months away. We've already had to deal with Bitcoin maxis and Ethereum maxis talking trash, and now even Chainlink people are starting to throw shade at the XRP community. When we throw out these super extreme price targets, it sometimes makes the whole group look a bit silly, you know? It's like someone saying Bitcoin is going to hit $1 million tomorrow. We all know that's not realistic in the short term, even if Bitcoin could eventually reach high numbers over many years. A lot of people still believe in Jake because they think he might have special information from NDAs or inside connections that regular folks don't have. That's why so many are putting their faith in his calls. But honestly, it would take some really crazy chain of events to line up perfectly for these kinds of prices in such a short window. So I think it's smart to take all of this with a big grain of salt. Let's talk about some of the real things that are actually happening with Ripple and XRP right now, because there is some solid progress. Ripple is connected to more than 100 financial institutions around the world. That includes some of the biggest banks and payment companies like Santander, Canadian Imperial Bank of Commerce, Kotak Mahindra Bank, Sumitomo Mitsui Banking Corporation, SEB, SBI Remit, and many more. Their payment network reaches 90 different markets, and those markets cover more than 90% of the daily foreign exchange trading. Just to give you an idea of how big that is, the global foreign exchange market moves about $7.5 trillion every single day. On average, that's around 7.5 million transactions, each worth about $1 million. If banks and institutions started using XRP instead of the old systems, they could save billions and billions of dollars every year in fees and inefficiencies. That's a huge incentive for them to eventually adopt it. Ripple's partnerships have also grown a lot in certain regions. They now reach nearly 20 million merchants across Southeast Asia through collaborations like Aeon Pay, and they have plans to expand even further into Africa, Latin America, and other emerging markets. Not long ago, Ripple bought a company called Rail for $200 million. Rail was one of the bigger players in the stablecoin space, especially for business-to-business cross-border payments. Every year, more than $3.6 billion in B2B payments already move through their system, and that number is growing very quickly. This purchase fits into a larger trend that's happening in the crypto and payments world. Companies are starting to combine two things: issuing their own stablecoins and providing the actual payment orchestration, the technology that makes the money move smoothly. For example, Circle started by issuing USDC, but now they also have their own payment network. Another company called Bridge began as an orchestration provider and then launched their own stablecoin called USDB. Ripple kind of started on the XRP side, trying to make it a bridge asset, then moved into stablecoin issuance with RLUSD, and now with the Rail acquisition, they're going deeper into orchestration specifically for stablecoins. It's going to be interesting to watch how these two roles, issuance and orchestration, work together. The big questions are, is the real value in issuing the stablecoin, and orchestration is just a way to get more people to use it? Or is orchestration the main value, and issuing your own stablecoin is just one way to make more money from it? Another thing to think about is neutrality. If a company offers both, will they push users toward their own stablecoin? Will there be special economic incentives if you use their coin inside their system? Or can you still easily use a different stablecoin from someone else? These are the kinds of details that will matter a lot as things grow. Back to Ripple, they also have solutions like Xcurrent and Xrapid, now integrated in different ways, that let banks and payment providers connect their old systems with new blockchain-powered networks. This creates true interoperability, meaning different payment rails can talk to each other smoothly. Several central banks have already tested or deployed Ripple-powered solutions. That includes the Royal Monetary Authority of Bhutan, the Saudi Central Bank, and the Bank of Thailand. Big companies like American Express and Bank of America have also run pilots using Ripple technology. Hundreds of banks, remittance services, and payment providers are integrated with Ripple's systems. There are dozens of country-specific payment corridors set up, and through stablecoin and crypto payment solutions, they reach tens of millions of merchants. All of this gives them access to more than 90% of the global foreign exchange market. There's also a lot of talk about stablecoins becoming the future of money movement. The Treasurer of the United States, Scott Bent, has said that stablecoins could grow into multiple trillions of dollars over the next few years. Ripple is clearly trying to position itself to capture a big piece of that business, especially in the business-to-business space, which has always been more complicated than regular consumer payments. B2B payments have traditionally been more in the territory of systems like SWIFT, but now stablecoins are starting to make inroads there too. Another positive development came when the SEC's case against Ripple was finally put to rest. Hester Pierce, who a lot of people call Crypto Mom because she's always supported crypto, said that now the people at the SEC who were busy with the lawsuit can finally focus on creating a clear regulatory framework for crypto assets. She's been a steady voice for sensible rules while Gary Gensler was in charge. There was also a report from the Central Bank of Malaysia that got a lot of attention. It suggested that, in some situations, XRP could even start replacing traditional bank deposits. That's pretty interesting when you think about how money might work in the future. On the XRP ledger side, there's new stuff happening with real-world assets. Someone named Luke Judges created this dashboard called the XRPL Real-World Asset Headquarters. It shows real-time analytics for real-world asset stablecoins and lets you watch TradFi, traditional finance activity happening on-chain. It's pretty cool if you want to check it out and play around with the data. We're also seeing more and more talk about tokenization. That means turning things like stocks, bonds, derivatives, real estate, and even debt into digital tokens on the blockchain. Right now, it feels like we're just at the very beginning. A few years from now, people will probably be tokenizing all kinds of things we can't even imagine today, and we'll be like, wait, they tokenize that too? Okay, I guess it makes sense. A lot of people in the community feel like there's limited time left to accumulate XRP before things really start moving fast. Between the regulatory clarity we're getting, the stablecoin race heating up, all the institutional partnerships, and the new infrastructure being built, it does feel like the pieces of a new financial system are coming together. Whoever controls the important parts of that system is going to hold a lot of power. Ripple and Stellar are both being used as messaging and payment systems in different ways, and we've seen how they can work alongside each other or in parallel. There are so many layers to this, from the daily cross-border payments, to the bigger institutional settlements, to the potential role in tokenizing real-world value. Banks might even come to Ripple in the future and ask them to help build their own stablecoins on the XRP ledger, which would create even more demand for XRP and for the whole network. I know a lot of this sounds exciting, and it is, but it's also a reminder that while Jake's big predictions get people hyped up, the actual progress is happening step by step through partnerships, technology improvements, regulatory wins, and real adoption. So that's pretty much the latest mix of what Jake Claver is calling for and what's actually unfolding with Ripple and XRP on the ground. It's a wild ride and nobody knows exactly how fast or how far it will go, but there are definitely real developments worth paying attention to.